Uh, all right, guys, how we doing? One sec. Just waiting to see. Oh, that's really loud. Okay. Sorry, give me 1 second. Hey, both of you get out here. Outside. Outside. Go. All right. I'm just waiting for some more people to hop in, and then we'll start up. All right. You know what? We got 30 people watching. I think we're good to start. So what up, guys? I am Royal Market Burglar, or Ethan. A lot of people just call me Royal. I've been trading for about 6.5 years now. Just a little introduction. Started out in crypto, went into penny stocks, been trading options for about the past 2.5 years, 3 years. And then I found a strategy that works really well on SPX, so decided to stick to that for the past 3 months, and it's been treating me really well. So we're going to go over what I'm looking at this week for SPX, and on top of that, a little bit into the strategy, since it's not a set strategy, but you guys can get some key points out of me explaining how I enter and exit trades based on certain indicators and levels. More heavily correlated with SPX. So without further ado, let's start. So what I want to do to start is, first of all, I want to go over just how I specifically trade. So a lot of people say, give me 1 second. Excuse me. A lot of people say that you shouldn't average down on weekly contracts. With my trading strategy, you're going to be playing weekly contracts a lot. You're never playing same day expiration. You're usually going 2 days out or more. But I do have a scale in method that is averaging down, if you will say. But some people, I don't consider it averaging down because you're not in a full position, right? So basically, this is how we go about it. Let's say we start out with we want to get into a play. We want to do a starter position, right? So I like scaling in either 3 or 4 parts. I'll typically say 3 parts, and then I'll have that 4th part in the back of my head just in case, right? So let's say we buy 1 contract to start, right? Once we buy that 1 contract, okay, we bought it at, let's say, $1. All right, keep it nice and simple. All right, so now the play goes in the other direction. Let's just say, we're still scaling in, so this is just a starter position, right? Right, so even if we go down from here, we know that we have more room to average in. So let's say the next time, now the contracts are at, not based on how much of a percentage you are down. We're basing these on levels, on where you're averaging in. So, and I'm just going over my scale in strategy to start, so you guys get an understanding when I get into the actual charting aspect of it. So now let's say the contract is 75 cents. It moved to a level, our next average in level. So instead of buying an additional one, I'm going to buy two, right? To give me a total. Whoa. I'm going to buy two to give me a total. Come on. Of 3 contracts now, right? So the reason why I'm buying 2 contracts instead of just one and doubling my position size is because, second scale in, is because if I were to just buy an additional contract at, I'm actually going to say this is, we're going to say this is 80. If I were to just buy an additional contract, my average would be 0.9, right? But now that I bought 2, my average is around 85, 87.5, 86, somewhere in that range. I'm not great at math, so I'm not going to be able to give you a straight up number right now, but you're going to have a little bit more room. And this is just the proper way to scale in, because if you're only averaging in and doubling your position size, you're only covering half that move. So if that move only comes down halfway, you're only getting out at break even. If you're averaging down and now you're only down, let's say you were down a full 100% when you average down, now you're down 50%. If you were to buy, if instead of doubling your position, you tripled your position or bought, you just doubled what you currently had and bought that amount, then you're only down around 33% instead of being down that 50%. So your second scale in is 3 contracts, right? Now your second scale in is 2 contracts. Now you have a total of 3 contracts. So if you're scaling in again, which this would be your final scale in, you're buying a total of 6 here, right? At, I don't know, contracts went to 0.7, let's say. Right? So now you have a total of 9 contracts, right? And that's your full scale in. Right? And you guys understand why we're doing that now, right? It's because, we started with 1, then we bought 2 more, then we bought 6 more because we had 3 contracts, so we bought 6 more, now we have 9. If you wanted to do 1 more average down off of this 9 contracts, your next buy would be 18 contracts. So that's just real basic, just how I scale in. My scale in method. I'm going to move this over here just in case anyone wants to see it later. You could just type in the chat, what's your scale in method. So now let's just go over some, just some simple charting on ES that I'm seeing right now. So first of all, I like levels and I like trend lines, right? So we're going to start out with finding some levels on the daily chart. Real simple, just finding bottoms and tops. So here's a bottom right here. We're going based off of the bottom of the red candle. Sometimes, and I do put support or resistance line not on the wick but on the actual body of the candle. I'll explain why when that happens. But we're just going to do some basic, just daily chart, top of white candles or top of green candles, however you guys want to do that. I'm seeing an area of significance over here based on this bottom. So I might take away this level since it doesn't look like it's been respected as well as, let's say, this level, which is a little bit more respected. right around there. I'm actually going to say right around here. Let's keep going, just finding some levels. I'm actually going to move it down to the 4-hour chart. It's easier to find them on here than the 1 day. Real simple. Just find these bottoms of consolidation ranges. And the reason why we're grabbing so many levels is because we're scalping. The entire strategy is scalping, so you're going to get out multiple times. You're not looking to take profit. You're not looking for those 100% gainers. You're looking for 20% gainers, 10% gainers. Those smaller percent gains will start adding up. And believe me, you're going to be a lot happier making 10% gains instead of, 100% gainer. Because you're going to be like, when can I do that again? Let's go a little bit lower too, since we could have a bearish week this week. So let's grab this level right here. Oh, perfect right there. And bottom of that consolidation. I'm going to take this bottom here just because it's interesting to me. And then we're going to take the top over here. And I'm not going to go much lower than that. Okay. Now we have all of our levels basically set. Yeah, that's okay. So here's an instance where, remember I said sometimes I'll respect the body of the candle more than the wick. So this level right here, I'm looking at it from here too. And you can see here that it's respecting the body a lot more than the wick. So I'm going to keep that level there, but I'm going to use it based on the body and not the wick. All right, so we have most of our levels for this range. We could go up higher too if you guys want to. I'm fairly bearish on the market right now, but just stick some quick ones in. Why not? There we go. That's I liked it above over there. All right. Maybe a little tiny one right here too, but not strong enough. Yeah, like right here. If you want a good little tip too is if you start doing so we're on the 4-hour time frame right now. As we move down to lower time frames, you'll see me change my horizontal line color to orange and green and yellow. That just lets me know that there are lighter levels of support or lighter levels of resistance than the red ones. So I'll go orange is the next time frame down, and then yellow is after that, and then green is the lowest time frame. All right. So now we have all these, support and resistance lines. This one's kind of pointless, but we're going to keep them all there because, again, remember, we're scalping. Trend line. This is one of my favorite trend lines today. This trend line, we broke out of it once, had a false breakout, and have been respecting it pretty heavily. It's a daily trend line, but you could call it a 4-hour trend line too. Easier to find it on the 4-hour than on the daily. Almost came up to it the other day. I thought we were going to reject off of there, but didn't make it up, and then look what happened when futures died out today. Okay, so additionally, cool little trick you guys should learn is rate of change in the market typically stays the same. So what we could do with this trend line is we can just go up here, clone it, right? And now let's find some channels, right? So This looks like a nice channel right here. All right, see how it's following that bottom, bottom, bottom. All right, we can clone that again. Look at that, bottom, bottom. Didn't exactly get there on this one, but that's fine. There could actually be a descending wedge forming on ES, but I don't really like patterns. I'm not a pattern guy. We could get, hold on, I want to change these to red too because we're on our larger time frame. We might have one or two more trend lines in there that are a little bit more slight. So what I might do is I might clone this, take this trend. You know, there's a little trend right here. Right here. See, but I'm not going to keep this one red. I'm going to make this one orange. So, because it's not as strong as the red trends. I'm going to clone that one more time because I see one more. Also not as significant, but it's there. And there we go. Alright, so we got some basic trend lines, some basic support and resistance levels based on our 4-hour chart. We can even, I mean, you can make an extra one up here. There's just nothing to confirm it yet. Like that. I'm not going to do that yet, though. Alright. So we have all our levels, all our little trend lines, right? So now let's find entry into some stuff. All right, so for that, we're going to go down to our smaller time frames. So what I'm using to trade is I'm going from the 45, I'm using the 45, I'm using the 3-minute, I'm using the 15-minute, and I'm using the 1-minute. Typically finding entry on the 45 and 15 and entering based on the 3 and the 1. That's how I go about my entering plays. So again, we're on this 45-minute chart. If you guys read over my Twitter thread about wicks, you guys can see that we have a pretty big bottom wick over here. That wicks tell the story. Big bottom wicks mean we're going up. Big top wicks mean we're going down, right? So based off of this bottom wick, right, if we hold over this support level at 42.7950, right, I'm not using, by the way, this is, I'm going over, you know, if I didn't have any indicators on my chart if I was entering a play here, right? So if I was entering a play here, we have a level at 42.7950, right? We came down really hard in this one candle, right? We wicked up really hard. What I'm waiting for, since I see this wick up, I'm expecting a bigger move to the upside. I'm expecting at least a move to 43.1750, which is our next level, right? So what I'm doing from here is I'm going down to our 15-minute, not liking it as much because of this candle. So what I'm going to say is if we hold over, and this isn't a high conviction play, since, I mean, I don't have any indicators there either. So I couldn't tell you the full conviction on the play. But if we hold over 42.79, right, I probably would have entered somewhere around here, right, on this candle. I probably would have entered this white candle right here. Could have entered a little high, might have gotten lucky and got in like towards the middle, right? But as long as we stay over this 42.7950, I'm expecting upside because of this candle. So I will play it up to this level and then I'll trim, or I would really play it up to here, high, trim there, right, wherever the high of the session is. I'll trim again here if I start with 3 contracts, and then I would leave that one runner and this would be my target, right? That's in terms of in terms of call side, right? We do have this trend line here, so you have to be wary of that. If you already taken one trim here and one trim here, and you only have one runner left, if you stay below this trend line, just make sure you don't go red on the play, and you'll be fine, right? Just if it keeps running, doesn't matter. You made your money, right? Another thing is gaps. You know, gaps are a little scary. There's a big gap here, so usually market makers want to fill this gap. It's not something they like leaving open like that. So this gap, ooh, I did not mean to do that. This gap will probably get filled. Will get filled tomorrow. I don't think so. Maybe. Like I'm not too bullish on the market right now. We just broke out of this uptrend too. So what I like to say about gaps, a gap's like filling at least 40%. All right, so we gap down. And why is my, there we go. And we need to fill this gap at least 40% from this first candle. So I'd like to see us get up to around 43.30. We might not get higher than 43.17. But it has to partially fill that gap, at least a little. But let's start getting into the strategy a little bit more. I'll let you guys know what indicators I'm using so you guys can see that. You know, for more confirmation of entry, you're using the 3-minute, right? So if we were on the 3-minute chart trying to find entry over here, we probably would have entered on this candle or this candle, gotten a little scared there, but you know, we have a stop loss. Our stop loss would be the next level, which would be this trend line, right? So that's your stop loss. Or you could even say, you know, tighter stop loss. Let's take a smaller intraday level. You could keep this as your stop loss over here, and you just mark it off because you're on a smaller time frame. You would mark it off with not a red trend line, not a red line, but a green line. And green lines are lines that you delete at the end of each day. So you would just keep that as your stop loss. You know, 42.79.50 is your entry. This is your stop loss. As long as you're above there, you're good. Sorry. Still drinking. It's the weekend. Hey, what's ESF? So ESF is, you can see up here it says ES1 exclamation point on TradingView. That's just the S&P 500 mini futures. It's basically the same as SPX, but it's SPX with after hours and stuff like that. It's the futures. So SPX numbers aren't going to be exactly the same, but you could look at ES and trade SPX contracts the same way. Yeah. Hopefully that answers your question, Mo. Okay, so let's get into some indicators. So I use a bunch of indicators, not necessarily using all of them in terms of like actual usefulness. We can take away that bottom one for now. So the few indicators, we'll go through them one at a time. So we'll start with the indicators that are paid indicators that are not free. So this, you guys see me post about this indicator a lot. This is the Nessie algo. Probably all of my traders use the Nessie algo. In terms of this video, I'm not going to talk about it. I'm actually going to take it off my chart, but I typically will use this Nessie line or this bounce line. If it is in between two of my levels, that will be my stop loss, right? I have a referral link in my link tree. It's all the way at the bottom. It's going to be like Omni Tech Algos. Most of my traders use this. We do have a partnership with the guy who created it, but it's because we all use it so much. So you guys can see, like, you know how I said like this green line would be my stop loss? right? Well, look what Nessie said. Nessie said, yeah, that green line is basically going to be your stop loss, right? This gray line would be my stop loss if I was using my indicators, right? So that's my stop loss. I put it a little bit higher, but Nessie is usually correct. So if it bounced off that green line, that's fine. If it got under that purple line, that's my stop loss. So that's how I'm using the Nessie indicator. It is a paid indicator. I highly recommend hopping on it if you're interested. It does take some time to actually understand it, but the guy who created it, his name's AI Links. He's pretty good at. He has some pretty good videos teaching people how to use it. So then the other paid indicator I use is the Omni Bands. It's actually a very simple version of it that I use. There are typically these outer divergence bands. I just use these two lines on the inside, which are more accurate VWAPs. So this is a long VWAP and a short VWAP. It typically gives me the idea if something's bearish or bullish. So in the short term, if something's under the yellow line, it's bearish, or if it's over the yellow line, it's bullish in the short term. In the long term, if it's over the white line, it's bullish. If it's under the white line, it's bearish. It does bounce off of it occasionally. I'm not finding entries based on that. I'm more using it as a tool of confidence. So if I'm in a play and it's, if I'm in puts and it's below the yellow line, and it's like hugging the yellow line, I'll be pretty comfortable to stay in puts. When it breaks below, I might exit, or when it breaks through it, I might exit. It's just a nice confirmation tool. And on the longer time frames, pretty sure it caught like the bounce on ES from like on the daily chart or something. Yeah, see, it basically caught the bounce on ES on the daily chart, and it caught the breakdown before the big drop over here. So it's a pretty good indicator on the longer time frames too. Other than that, the rest of my indicators are, free indicators. So the first one you're going to use is a regular VWAP, session VWAP based on candle close. You're going to use a VWMA, which is a volume weighted moving average. It is not the same as a VWAP. You're also going to adjust it. I think the default is the length of 16 and no offset. I use a length of 22 and an offset of 1. And then I also use this free indicator by LuxAlgo called the trauma line, which is the trend regularity adaptive moving average. So all of these will be on my chart. So I'll go over them one at a time. So what I'm looking at for VWAP is I'm not looking at VWAP for bounces or anything like that. I'm looking at VWAP as a target. So if something is bouncing off a level, and it's, so where's a spot where I can use it as an example? So let's say like right here. We dropped off pretty hard from like a high, broke through VWAP. We came down to my level, might have entered here, right? Might have scaled in a little more, right? But basically what I'm doing here, since I'm so far below VWAP and I'm entering calls, and below VWAP is a bearish sign, what I would do is I would take my first and major sell at VWAP, right? So if I play back up into VWAP, and if it keeps dipping down below, you're not doing this at the end of the day, but so here, let's take this for example, right? This thing spikes, comes down a little bit. Let's say you had a level right here, which we don't, but let's say you do, right? And you start scaling into puts here and you don't really have a stop loss. What you would just do is you use my scale in method and keep scaling in all the way up as long as you're doing that double buy scale in method. And by the time you got back down to VWAP, you'd be green. This would be basically about the same spot you entered, but you'd be green. It's not the safest way, but it is a way. So that's really what you're using VWAP for. You're using VWAP as a target when you're very far extended either above or beneath it. It has to be extended. You're not just like, you can't say, oh, I'm going to play it from here to here. That's not extended. Extended would be like, this is fairly extended, but this was close to the end of the day, so you're not using that method at the end of the day, because then VWAP just does shit like that. Let me go all the way back. Now, let's go over the VWMA. VWMA is another confirmation tool, just like the Omni Bands, where as long as you're over that VWMA, you have a little bit more confidence. Typically, what you can see with the VWMA is when it starts flattening out. So right around here, you could see like it flattened out a little bit. That would let me know that the volume is starting to drop off a little bit, and we might get a little bit more chop. When it starts going up and down, above and below the VWMA, that's more of a sign that's consolidation. So what I'll do here is I'll make a little channel based off of what the VWMA is doing, right? So it's really staying within this channel right here, right? And that's just basic support and resistance too. But as soon as it makes a break to like a major side, stays over the VWMA, it can let me here. This is a better spot. We started flattening out right around here. Make my little zone. Right about that, right? Looks like it's favoring the upside every time it comes below the VWMA. It has a sharp candle right back above it. This hammer candle gives me confidence in entering above. Stays above, breaks out of my zone. I can stay in this play until it breaks back below VWMA, which is right around here. So that's how you would use the VWMA. Like I said, guys, there's no like true strategy to my trading SPX. There's just different ways of entry. The trauma line is very much a bounce line. This thing gets respected so much on the 15-minute. It's actually pretty insane. So this thing, you're looking for breaks. If it's flat, you're not doing anything. But if it just came down sharp and it breaks over, it's a good spot to enter in calls. Or if it breaks below, like, first of all, it's holding support over the trauma line right now. If it breaks below the trauma line over here, might be a good way to get in puts. If it's, we have a little level right here. If it breaks below this level and then it breaks below the trauma line, gives you more confirmation into those puts. Yeah, by the way, do you guys see what's happening on ES right now? It's almost at our target at 43.17. That's what we were looking for. Yeah, so basically, if we would have entered a play today, right, on our 3-minute chart, like we were looking before, we would have gotten in at around like these candles over here, right, and we would have had all this profit side right now, which on SPX contracts, this is like probably $300 a contract, the way those contracts move. Sorry. Other than that, do you guys want me to go over anything else? Just because I'm not the best at like teaching. Here's one thing that you guys should learn before really stepping into the trading space. Don't get discouraged if you're failing for an extended period of time. Just make sure you're taking notes as to why you're failing. Make sure if you get into play and lose, right, follow that play after your get out to see what happens if you would have gone green, and talk about, and then afterwards journal down in your notebook about why you went red on that play and what happened afterwards and what you should have done differently. Right? It's the most important thing to do. I'll tell you guys this. When I first started trading, I had $60,000 that I started with, and I lost all 60K. And then I took about a year off and was just like, you know what, whatever. I asked my dad for $500. My dad gave me $500 when I was about 16, 17. And $500 with some really, really strict rules turned into $2.3 million, right? But the thing is that I lost that 60K to start, right? Imagine losing 60K. It's terrible. It's the worst feeling ever. But what you guys have to understand is that trial and error is what's going to make you succeed in this industry. On top of that, don't say you have a trading style when you're not a profitable trader yet. You don't have a trading style until you figure out what's working for you consistently, right? So don't say you're a swing trader. Don't say you're a scalper. Don't say you're a day trader. Try out all of the above until you find what works for you, right? That's how you're going to become the most profitable trader. You're not going to learn. There's no secret to the game, right? Really, there's price action and there's levels, and that's really all there is. There's price action. There's levels, right? Yeah, you can follow people that do the strat based on, the strat. The strat is all candle structure, right? Which is just price action, right? All trading is price action and levels. If you can find your right levels and you understand what wicks are and you understand candle structure, and which is price action, you are never going to fail in this industry. Can you talk about what SPX strike and expiration you enter? Yes, of course. Thank you for mentioning that. Let me go back to this daily thing. Then I can just do this. Ooh, I can do this. Where'd that go? There we go. I like having a little dry area. There we go. Yeah, so let's say, let's open up our option chain right now. Let's check out these contracts. So let's pretend it's Monday. Right? And we're planning on trading some SPX. So the contracts I will be looking at would be most likely the March 2nd or the March 4th contracts. I would be most comfortable with the March 2nd for scalps and the March 4th for day trades. So what I might do is I might buy one of each, scalp the March 2nd ones, and day trade the March 4th ones. So I would enter them both on the same spot. I would get out of the ones that have the shorter expiration, and I would hold the ones that have the longer expiration as runners. But if you're just looking, really the rule of the game is you're going 2 days out to 7 days out. You're not going longer, or the contracts are going to be too expensive. You're not going shorter, or the theta decay is going to be too big, right? Strike price I'm typically doing is I'm doing a strike that is at the money. So that means within the first 5 strike prices. They are going to be more expensive, but that's fine. You're only looking for small percentage gains to build up your account. Right? If you can only afford 1 or 2 contracts, that's fine. Just make sure that you're not averaging in too hard and leveraging in too hard. If you have a smaller account, don't do this with SPX. Do this with SPY. You're going to get absolutely hammered doing this with SPX. I recommend only trading SPX if you have over 25K in your account. Anything under 25K, you should be sticking to SPY. It's going to move the same way SPX does, so you could look at ES and trade SPY contracts the same way. That's totally fine. Sorry. You better be off with SPY at 400. What do you mean? What do you mean by you better be off with SPY at 400? I mean, if you're going long, yeah. Personally, to me, my buy zone on SPY is around 3,600. Like 3,600 up to 3,800 was my buy zone on SPY for where I'm going long. I think once we get below 39.67, that's when we start seeing, or if we do get below 39.67, that's when we start seeing some more bullish activity in the market. You know, the flow right now has been absolutely terrible in SPY. It's just literally been all puts. What else? So we went over expiration, went over all that. You know, what I might do is, yeah, I'm going to do this. So tomorrow, instead of being in my premium voice chat, I'm going to be in my free VC during market hours. So you guys can kind of see this in live action and see what's actually going on. We usually do that on Fridays. I'm going to do it Monday and Friday this week, so you guys get a little bit extra. Because I'm not great at teaching. I think you guys can see I'm not great at teaching this stuff. That's why I hire educators to teach for me, because I'm not a great linguistic person. I don't know how to talk well. Sorry about that. But you guys are all welcome to be in free VC tomorrow, starting at 9:30 a.m. Eastern. I might be in. I'm gonna be on Wolf Financial's Twitter Space for a little bit too. So tune into that. Other than that, join the Discord, discord.gg/RNB. Follow me on Twitter. If you guys have any questions, shoot me a DM. You know, I'm always, if I didn't touch on something you wanted me to touch on in this video, I can always go back and touch on it. So you guys just let me know. Other than that, hopefully everyone makes some good money this week. I got one more day left to make sure I only do one red day in the week. How do I think SPY will open tomorrow after this gap down? Not sure. I think we stay under 43.1750 on ES. And if we do stay under there, then we see more downside. We could possibly see the lows of, we can see the lows of 41.13 on ES this week again. We can also, below there, we're seeing 4,000 on ES. The fifth strikeout. Well, okay, they're $86 right now because they were on Friday. This is the price that they were on Friday. You gotta wait till tomorrow. The prices on these contracts are not correct. Like these 3-day out contracts tomorrow are gonna be worth $40, maybe $30, somewhere around that. Maybe $50, but like they're gonna be way cheaper than $86. Don't worry about that. When I trade SPY, should I watch SPX, you think? No. So if you're trading, there's no reason to look at, okay, so I look at ES when I trade SPX. I also look at ES when I trade SPY, right? So you don't look at SPX when you're trading SPY because they're the same exact thing. ES is somewhat the same thing, but it's futures. So I like to think it moves like a few seconds early, which it really doesn't. But there's just more to be told in the ES chart than there is in the SPX and SPY chart. So if you're trading SPX or SPY, then sorry, if you're trading SPX or SPY, you should look at ES. What happened to me on the day I went red? I can actually show you the exact day I went red. I can show you the exact day I went red. So, where's my 45-minute chart? This right here. So, this day was the worst day of my month. It sucked. I thought we were going to reject off this trend line right here. So I entered puts at this level at 45, 52, 75, hoping that we rejected off this trend line and came back down. We did not. We pushed up to here, and then I was scaling in, and so we rejected off of this point over here. But what happened was when I scaled in, and right around here, I was like at the bottom of these red candles, I was almost break even. I was down about like 2K, right? And I had leveraged way too heavy into the play. So I sold all my contracts here and I was in puts. And then it started coming back up. And so when it came down over here, I was like, oh, this thing's going to come down. This was just a bear flag. So I re-entered puts. And then it started going back up. And I was like, you know what? Fuck, I'm over trading. And I sold. And then it spiked down. So my conviction was correct. But I was just trading stupid. I had made good money for like the entire week. It was only 1.37K that I lost. So it took up like a day of trading. It kind of sucks too because if I would have held that play. So the reason why I was so pissed about that play was because it wasn't that I lost 1.37K. It's that my conviction was correct. And if I would have stayed in the play, then I would have made like 200 and something grand. What time frame? Okay, so when I'm trading during the day, I'm typically on here, I'll load my so I'm typically on these time frames. I'll do the 1 minute, 3 minute, the 15, and the 45 minute. Those are all the time frames I'm looking at. But I'm looking at 4 at the same time, not just one specifically. By the way, guys, we almost hit that target of ours. We were so close. We were $2 away from the 43.1750. But it looks like we're rejecting now off of, we were close to that target. We were $2 away. So we would have made money on that play if this was market hours. Thank you, Alexandra. Yeah, Mo, it's, just look up S&P, what is it? S&P mini futures, is that what it is? S&P mini S&P 500 futures. All right. What platform do you use to enter your trades? I personally use, so I have 2 different brokerages I use. I use Webull for most of my options trading, but I do have a long-term portfolio on my TD Ameritrade account. And if I see a leap that, like an option leap that I really like, I'll grab that on TD. Do you sell, bid, and buy at ask for SPX contracts? Another great question. That's something I should have touched on. So what I'm doing when I'm buying, when I'm buying a contract is I'm typically going in right at around mid price or just above mid price, so to make sure I get filled. So you're not slapping the ask, but you are going slightly above mid price. It is better to get filled closer to bid, but sometimes it's just not a possibility. And then when you're getting out, you're typically slapping the bid. You want to make sure you get filled as quickly as possible. So don't do a market order because you could get filled terribly. But yeah, I'm getting closer to the bid on that one. Other than that, guys, catch me in voice chat tomorrow. I'll be in free VC for all of you. And then additionally, if you have any questions, shoot me a DM on Twitter, shoot me a DM on don't shoot me a DM on Discord. Shoot me a DM on Twitter. Can we see your Webull options set up? So I actually don't trade I don't trade on my I don't use Webull on my desktop. So there is no, I just use the phone app. The desktop app sucks. Absolutely terrible. So I enter on my phone. It sounds weird, but or not my. I mean, I don't have an iPhone. I have a Galaxy Z Fold 3, so it's basically like a tablet. So I'm entering on my Galaxy Z Fold 3. It's a lot better than the Webull app. The Webull app is absolutely terrible on your computer. Yeah, I don't even think I have it downloaded on my computer, to be honest with you. And additionally, just so you guys know, you can't trade SPX on the Webull desktop app, but you can trade it on the phone app. They are updating that, but at the moment, you cannot trade SPX on the desktop app. You can only trade it on the phone app. Other than that, guys, hope to see you guys in VC tomorrow. Hopefully I see you guys tomorrow on Free VC. If you have any questions, shoot me a DM. I will also be on Wolf Financial's Twitter Space tomorrow at 9:20 a.m. I'll hop right into Free VC after that, and I will be in there all day. I hope to see you guys in there, and thanks so much for joining. Have a good night, guys.